A trade war between the US and Canada? How did we get here? And more importantly, how does it impact you? Will prices go up? Will businesses struggle? And what can we do to minimize the damage?
In this video, we'll break down everything you need to know. Let's get started.
Background. Why is there a trade war? The United States and Canada have been top trading partners for decades, exchanging over $1.2 trillion in goods and services each year. But despite this strong relationship, trade tensions have been growing. Here's why. Tariffs on key industries. The U.S. has imposed tariffs on Canadian steel, aluminum, and lumber. In response, Canada has placed its own tariffs on American goods. Agriculture disputes. The U.S. wants greater access to Canadian dairy markets, while Canada aims to protect its local farmers. Energy and technology conflicts. Disagreements over oil pipelines, natural resources, and digital trade have added to the tension. The latest developments in this trade war could have serious economic consequences for businesses, workers, and consumers. How will it impact businesses? For companies that rely on cross-border trade, the impact could be significant. Higher costs. Businesses will have to pay more for raw materials like steel, aluminum, and lumber, driving up production costs.
Supply chain disruptions. Delays in imports and exports could slow down manufacturing and retail operations.
Potential job losses. If costs continue to rise, companies might have to cut jobs or even shut down. For small businesses and startups, the challenge is even greater. Increased shipping fees, customs delays, and price hikes could force them to raise prices or struggle to survive.
How will it affect consumers? If businesses pay more, that cost eventually gets passed down to you, the consumer. Here's what to expect. Higher prices on everyday goods. Tariffs on food, electronics, and automobiles could mean higher grocery bills, more expensive cars, and pricier home construction. Fewer product choices. With trade restrictions, some international products may become less available or disappear from shelves entirely. Weaker job market. If businesses struggle, hiring slows down, and wages may stagnate, affecting economic growth. What can we do to mitigate the impact? While we can't stop trade disputes, we can take steps to minimize their effects. For businesses, diversify suppliers to avoid relying on a single country. Lock in long-term pricing agreements to protect against sudden cost increases. Take advantage of government trade assistance programs. For consumers, buy local. Supporting domestic businesses can help reduce reliance on imports. Plan for price increases. Budgeting for potential inflation can help avoid financial strain. Invest wisely. Trade wars impact the stock market, so diversifying your investments is a smart move. For policymakers and governments, strengthen trade negotiations to reduce economic damage. Support industries affected by tariffs to prevent job losses. Promote domestic production to reduce dependence on imports. Conclusion: what's next? The US-Canada trade war isn't just about politics. It affects the economy, businesses, and even your daily expenses. While we can't predict what will happen next, staying informed and prepared is the best strategy. What do you think? Should Canada fight back with more tariffs? Or should both sides negotiate a better deal? Let me know in the comments. And don't forget to like, subscribe, and turn on notifications for more updates.